Good evening, this is Nick Inman from VolumeProfileTrader.com on Friday, November 18th. And first off, I want to say happy weekend. I hope your trading week was good. I hope your overall week was good. And as we look into next week with a few trading ideas and some market analysis, I want to say first things first, there is supposed to be some news to come out of Europe this weekend, so it's important to see how the market reacts to the news, and if the market sells off, obviously it doesn't like it, and if it rallies, obviously it likes it. But let's jump into the S&P, and we actually have a few names which look like they are at decent buying opportunities, and so let's just jump right in now. The S&P, we had a flat day as far as trading opportunities. If day trading is your thing, then there were some opportunities to make some money. They weren't big swings, but they were opportunities. And I know that during days like these, I'm not very active in the market, especially on Fridays. I just get my work done at the beginning of the day and then take off from there. But what we're seeing here right now is support at this October point of control, and we continue, for the last 2 days, markets held this level, though there wasn't, I talked about last night how we were looking for a bounce. There was a small bounce, and I guess what's more important is that these levels are holding for now. So another thing is, if we do get any strength, you can see these moving averages, which have been holding, price has been bouncing off of them, not textbook, but they have been relatively good support. And now you can see, let's say, for example, the market opens at around this 1235 level on Monday, regardless of the news. Don't you think there are a lot of people who not only will sell just because of this important level, this point of control level for this balance range around 1235, 1240, but these moving averages, they're all coming down and they're all in the 1235, 1240 zone. So that just screams sell to me, especially to those who didn't sell when the market was back up in the 1250 range. So if you've been following these videos, if anything, you should be sitting in cash, or you should have had a profitable end to your week. So either or, it doesn't really matter. It's just what kind of trader you are and also your experience. So I think the S&P, the bias remains to the downside, but if there is some positive news that comes out, it could change anything. So let's just keep managing our risk, and you really can't do much more than that. Unfortunately, we're just in that kind of market environment. And as much as I would like to see this market trend higher and make higher highs and higher lows, it's not doing that. And until it does that, and we'll know when it does that, the market will eventually do it again, and we'll be all over it and we'll make a ton of money. But until then, the opportunities are less frequent, the expectations are smaller, and that should make you want to trade smaller and take less risk. And unfortunately, if you're trading full time and you have a case of the can't help it and just love to make trades every day, I hate to burst your bubble, but that's just not what professional traders do. And professional traders are very opportunistic, and they wait for the opportunities to come to them. And when those opportunities come, they exploit them, and usually that means they have smaller risk and higher expectations. But if you're trading every day, doing transactions basically because you're bored and you want to do something, that's a real quick way to deplete your trading account. Now, if you're making money doing that, then by all means keep doing what you're doing, and more power to you. I hope you make a ton of money, but most people aren't like that. I know I'm not like that. trade very opportunistically. I sit on my hands until the opportunity is there, and when it is there, that's when you take advantage. So as we look at the S&P on a daily chart, as I zoom out, you can see we had this breakdown, and we're still in no man's land. We're at October's point of control, but do you see a bounce? Do you see buyers coming in? And I know it's Friday, not many people, even though it's options expiration, not many people were taking on risk. And can you really blame them? Why step in front of this right now? Wait until this comes back into the 1200, 1180 zone where there is some nice volume, and that's when you can define your risk and wait for a good bounce, whether it be at 1200, 1190, or 1180, and that's your trading opportunity to the long side. But for now, the sellers are dominating the market. I shouldn't say dominating, they're controlling the market short term, and we're looking to see if the bulls or the buyers can make a stand. And I don't think they'll do it at these levels. I think they're waiting for lower prices. And if you look at individual names by taking a bottom-up approach instead of a top-down approach, you can see that like back in basically in this area where a lot of names were breaking down but the overall market was holding up, we're seeing the same effect. The market's not breaking down, but names are breaking down, and it's just not an opportunistic time to be a buyer. Now, if you're selling the market and making profits to the short side or making money to the short side, then it makes a lot of sense. But you're coming into an area where people are going to start buying back their shorts, and buyers are going to be interested in getting long. So we're close to an opportunity, but we're just not there yet. But of course, any positive news out of Europe, like the ECB is going to print money for the IMF, it's going to be positive, and it's probably going to spark some kind of buying in the market. I don't know if it fails at that point of control, the 1235, 1240 level that we were talking about, but it could be a nice opportunity. So let's jump into the Nasdaq and a few other names. So the Nasdaq, we're seeing some troubling signs, and the Nasdaq definitely outperformed to the downside this week, and I'm not sure if it's because, well, there's some, like for example, Salesforce, they announced earnings and they got crushed. I know Dell announced earnings this week and they're trading down. So there are names that didn't do good on the earnings front as far as price action, and they have some weight to the Nasdaq. But you can see, like the S&P from the beginning of the year, if you've been watching my videos, you'll know what I'm talking about, where it balanced at the top of the range and the point of control formed at the top of the range, and then it had a massive breakdown, back in August, obviously. It looks like that same development may be happening in the Nasdaq, where we formed our balance range, and likewise back in the beginning of the year, during the summer months, we're seeing a breakdown from that point of control. And I would say stay clear from Nasdaq until we come down to basically the 2200 level. And when we get down to that level, I think that's when you can get interested in being a buyer and taking on some risk to the long side, because we've had some nice buying opportunities when the Nasdaq has come down to this value area low, which is what this 2200 level is, this blue line. And obviously we had a mess over here, but even so, I mean, not that the risk is appropriate, but if you bought at these levels, you would have been profitable, needless to say. So wait for the Nasdaq, wait for the market to come in a little more. We're close to an opportunity from a volume profile standpoint, but it's just not there yet, and any macro news can trump what basically the potential price action. So let's cover oil, and I think I have a few trading opportunities or ideas that may make sense for you maybe for the long term, maybe for the short term trading idea investment. It just depends, but I made sure that the long-term volume profile charts coincided with the short-term volume profile charts. Okay, oil, it's doing what we expected. We got an overshoot to the upside, and now we're seeing some pullback. And this oil could just resolve in this, basically, where are the lows today? Lows around 96.70, so call it 96.95. That could be our low end of the range, and our high, our upper end of the range are the recent highs, with the focus on this $98 to $100 level, which is it's not the point of control for the year, but it is the point of control for this respective balance range. And that's important because people have money at the line, on the line, the most money on the line at those levels. So it's important to know where people have a lot of money invested. And right now, it's this $98 to $100 level that matters. Ultimately, if oil comes down to the 90 to 85 range, I think that is an absolute great buying opportunity of oil stocks. But for now, we are at the top end of the range. We'll see what the market does. You can see the moving averages are pointing up, so I wouldn't be surprised to see sideways consolidation. We may get a pullback to the low 90s, but I think that could be an opportunity to buy. So be aware, be on, set some alerts and watch it over the next week or so. I don't think you have to jump into this right now. Wait for a little more confirmation. I do think that oil, realistically, for now, is at the top end of its range, though. So this is the end of video number 1. In video number 2, we're going to talk about specific names, specific opportunities, and try to make some money for the week ahead.